everybody, how's it going? Rick here with another Forex trading video. In this video, I want to show you in depth what the Teacup strategy is, how you can find your own teacups, and just so you could do a little back testing or testing on a demo account, or if you choose to do so, implement them on your everyday trading, right? So I think as traders, one of the things that we always need to do is be changing our game up a little bit, looking for additional strategies that have high or higher percent wins than what we're currently doing, or just add some similar styles or similar win rates to our arsenal, right? The more we have, the better. So I wanted to do what I can here and just show you a little bit. So I'm going to we'll go back a little bit here and find it, all right? So a couple things are important. Number one, there are a few rules that you're going to want to follow. Number one rule, and I do this rule for all my strategies because I'm not a news trader, so avoid news. Any sort of news can throw your TA right out the window. Nothing matters when news hits, right? The only thing that matters is what that news says. Everything else doesn't matter. You can see some huge spikes, some huge drops, and all of that stuff from news, all right? So avoid the news. Then you're going to want to set up your chart. There's not a lot of indicators that you're going to need on this strategy. That's why I really like this strategy. I'm more of a naked Forex kind of trader where, I like to work on price action and really basic stuff. I don't use a lot of fibs or any of that stuff. It's not necessary for the strategies that I employ. And again, they're 85, 90% win rates when you follow the rules. So you're going to want to set up an exponential moving average with 50 and 0, okay? You're also going to want to set up a normal simple moving average with 4 and 0. So as you'll see, this will really just hug the price really closely. So what this comes into play is really the second rule, and potentially the one that people will miss from time to time. When the 4 crosses the 50 in a bullish pattern, you don't want to take the next teacup, okay? So keep that in mind. When the 4, my blue line, crosses the yellow line in a bullish pattern, so right here, I would not take the next teacup after that, or right here, I would not take the next teacup after that. The second one's fine, just not the first one, okay? So what a teacup is? Well, the first thing you're going to want to do is find a bullish candle, right? A bullish candle, followed by a bearish candle. Okay, so this green one right here is the bullish one, followed by a bearish candle. You want the bodies, ignore the wicks, you want the bodies to pretty much line up with each other, okay? And then the third candle, so this is a 3-candle setup. The third candle, you want its high to be lower than the bullish candle if it's a bullish candle itself. So if it's a bullish, third candle's a bull, you want it to go back to your first bullish candle, make sure the high is lower than that. If your third candle happens to be a bearish candle, you want the low to be lower than your bearish candle in the first 2 candles of the setup. So that is a teacup right here. So is it the first teacup? Yes, it is. So I would ignore that one. So let's look for another one. Nope, not here, not here, right here. So you can see there's a couple here, but the high is higher. Then you got this one, the high is higher, but right here. So now you'll take this right here, okay? This is the first, I should say the second teacup after that. Get a horizontal line and line her up, all right? So now all you're gonna do is you got your bullish, you got your bearish, and your third candle, your bear, low is lower than your previous low. Now, all you want to do is set a sell order at this price. So you'll notice your line has a price. So I would set a sell order at 0.96678. It's going to be a sell limit order. And on a 1-hour chart, we're looking for only 25 pips of profit. The stop loss would be 30. So right at the close of this candle, you'll enter it. On the next candle, it would have been triggered. And let's make sure we get our pips. We sure do. All right, 30 pips down. There we go. So that was a successful teacup trade. Now the beauty of a teacup trade is as soon as you hit your take profit, and notice it, so right here, you can actually enter in a second sell limit order at the same exact price. So for every recognized teacup, you can enter 2 positions. You hit one, boom, you come back up again, and look at that. It goes back down again. So this is a perfect example of the teacup strategy. Beautiful, right? Nice and simple. One bullish candle followed by a bearish candle. Third candle has to be more lower low if it's a bear, right? Or a lower high if it's a bull. So very easy to recognize. Not a lot of moving parts to this strategy. Set the sell limit, pow, win. Comes back up with another sell limit, hits it again, pow, win. Now you're done with that one, or you could technically keep it going, right? Because let's take this out. Because say you missed this trade, but what if you saw this one, right? So what if you just saw this one? So bullish candle, bearish candle, lower high than that. That's a trade. Boom, right there. All right. So now you're going to say sell limit at 0.96655. Okay. So waiting all this time, nothing's popping. All of a sudden, boom, we get popped right here. Got to watch out, right? Did we get it? Nah, it's only 10 pips or so. So our stop loss of 30 pips, right? It did not get hit. And there you go. Your take profit got destroyed. Monster, right? So that is what we're looking at when we're looking at the teacups, okay? It's a very, very simple strategy to use. I suggest you back test it based on your personal pairs that you like. Make sure that it's in alignment. I literally, as I hit record, was just selecting this pair. I didn't do any pre-checking to make sure this was going to be a good pair for the video. I literally just did that and scrolled a little bit and found where I wanted to start it. It was that simple for me to find it. I mean, we can do that really anywhere. That's the beauty of back testing strategies. So it's a very, very easy strategy to learn, and just one of the many, many successful strategies that we're using in my trading group. So I hope you enjoyed the video. I hope it was helpful for you. And again, what you're looking for is the 3 candle setup that we talked about. If you're doing it on the 1 hour chart, it's going to be 25 pip take profit, okay? If you're using the 4 hour chart, it's going to be 50 pip take profit. If you're using the daily or the monthly for any reason, if you like to do longer term trades, you're looking at 100 pip take profit. Now the stop loss is always 30 regardless of the size. So if you're a longer trader, your risk stays the same, but your reward gets higher. So I like to do, some 1 hour and 4 hour. That's just my style. I'm more of the day trader, potential swing trader kind of guy. But you can do whatever it is. I don't like going to the smaller time frames. I haven't really back tested on the 30-minute chart or the 15-minute chart or anything like that. The hour is the lowest I'll go on this strategy personally. But feel free, test it out yourself and see if you like it. I hope this video was helpful for you guys. I hope you enjoyed learning a little bit about the teacup strategy, and I hope you can see the value. If you have any questions, let me know in the comments. I appreciate the help, and thank you guys very much for your time.